Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is August 22nd. I'm going to take a look at some of the Forex major currency pairs and what the price action is telling us today to start the new trading week. Before we get started, I would like to invite you all to take a look at the weekend Forex report for the week starting August 22nd, 2022. You can find that on our website at ForexLive.com. Click on the technical analysis section and you'll see it down there listed there. It looks like this. So go there, take a look at it. If you like it, give it a thumbs up. If you don't like it, give it a thumbs down. I'm equal thumbs up or thumbs down producer, so feel free to do that. Also, your comments would be greatly appreciated as well. Let's start by taking a look at the euro versus US dollar, not the dollar versus yen, the euro versus US dollar. And as you can see, the price moved below the parity level and below the low prices through here at 99.96. Today's low came in at 99.88. There's always going to be some issue around the parity level for the euro versus US dollar. There hasn't been many times where the price has traded below the parity level. You have to go back to 2002 here for the last time the price did that, prior to last month. So there is some slowing in that idea. However, the fundamentals within Europe continue to be more toward the weakish side. They're still dealing with Russia. They're dealing with the Gazprom pipeline, or the Gazprom supply of oil to Europe. They announced that there's going to be a 3-day shutdown at the end of the month. Putin playing games again. We already know that supplies coming through the Nord Stream pipeline is at the fraction of what it was before they went on their maintenance schedule of a month or so ago. It's putting a lot of pressure on things like natural gas in Europe as we head into the winter season there, and that's going to be a drag on their economy and also keep inflation higher, perhaps push other prices higher to the upside as well. So it's not a pretty situation in Europe, and that's leading to the downside for this currency pair from a fundamental perspective. Taking a look at the hourly chart, we moved outside of this box here that had confined the range for a number of days. We did try to move above it actually just last week, up here and up here, but couldn't sustain that momentum. And on Thursday and Friday, recall, the price moved below the lower end of that extreme, and we've continued to move to the downside here in the euro versus US dollar. This is our old lows at the 97-ish type area where the price bottom there. The low price since 2002 goes down to 0.99515, and that will be the next key target. If we go below that level, we're in lowest prices since 2002. Taking a look at the 5-minute chart for just clues intraday, because the bias remains so bearish. You need to look to the 5-minute chart to see some clues that might push this price to the upside, even if it is just a short squeeze. And if we take a look at the 5-minute chart and these moving averages, we try to trade above and below it here in, I guess that was probably the early European session, then trended to the downside. In Asian session trading here today, we held below the 100 bar moving average, tried to held below it here. That's all bearish, making new lows here, and then we broke above both the 100 and the 200 bar moving average here, and you can see how the traders tried to keep the price above the 100 bar moving average here. If we were able to do that, we could have seen the price move to the upside, but buyers turned to sellers through here, and the price started to move its way to the downside, making our new lows to 99.88. The 100 bar moving average is going to be a short-term resistance target and or short-term bias change for this currency pair. If we're able to get above that level and above the 200 and stay above that, that would be a step in the dip buyers direction. But don't get me wrong, folks, the sellers are still in control in this currency pair. If you if you want to put a bid in at the parity level and hope that the price moves up, put an offer at 99.90 if the price moves down, because the sellers are still in control. Let's take a look at the dollar versus yen. We'll start by looking at the daily chart, and we've seen this is the 5th day to the upside. We closed Friday near 136.90, and we're currently trading at the 37.22 level, so it looks like we're on our way to the 5th straight day to the upside. We moved above the high prices from June through here in the month of July. The price traded above and below that high June price. So and anyway, it's still a positive development, because we did try to go above that level on Friday but couldn't, and close below that level. So getting above the 137 level is obviously a key or a positive bias level for the dollar versus yen. This is what it looks like on the hourly chart. Not much of a trading range today. Moved to the upside, moved to the downside, now moving back to the upside above this swing area. Go back in time, take a look at some lows and highs. Focus on this yellow area right through here. Lows, highs, low, high. A little break up here that failed. Went up to the 200-hour moving average and then broke back to the downside. Trading on Friday, we moved above and below that level, and today we're moving above and below it here as well. I guess you can say that close support is 136.91. Stay above that level. That would be more bullish. Admittedly, we've moved above and below it here today, so anything can happen. We're sort of in a choppy trading session here for the dollar versus yen, but the fundamentals for that currency pair still remain more positive, as U.S. is looking to raise rates. We have and the in Bank of Japan is looking to continue their yield curve controls and keep the rates low in that country. So that's helping to support the currency pair. Also, we have again, as a reminder, Jackson Hole on Friday. We'll be listening to Chair Powell, most of the Fed officials last week. Still on the fence between 50 and 75 basis points, but the trajectory is certainly still to the upside in the U.S. As far as rates go, we're seeing little changes in rates here this morning. Let's take a look at the sterling versus U.S. dollar. Again, we'll go to the daily chart, and we are pushing down toward the 1.17594, or we did the low price here today, moved to 1.1781. So got within 20 or so pips away from that low. This low happens to be the lowest level going back to the March and period where March 2020 period, the pandemic lows that took the price all the way down to 114.83. So there is room to the downside here for the sterling versus U.S. dollar still, but we are approaching the low price for the year. Low price going back to 2002 on the daily chart. This is what it looks like on the hourly chart. Had earmarked this area between 118.02 and 118, I think that's 06 or something around there. Traded above and below that, admittedly, so not much information coming out of there. On the 5-minute chart, again, some choppy action. Here we are trading right around the 100 and 200 bar moving average. If we're able to stay above this level, and we did try to hold, we are trying to hold support against the 100 bar moving average here. So intraday in the short term, dip buyers may have a little temptation to go into the market and hope that the price moves up from here. We will see. But if we start to trade back below these moving averages, all bets are off, because the bias still remains to the downside. Aussie versus U.S. dollar, I want to bring this up because the Aussie and New Zealand are one of the strongest currencies pairs this week, or today, I should say. Last week, they were the weakest of the currency pairs. The Aussie versus U.S. dollar did find support near the 61.8% retracement and near these swing areas, swing high, swing low through here. Last time we were at this area, the 61.8% retracement joins it, and we found the support buyers against that level. The 100-hour moving average comes in at 69.35 on the top side. In this swing area here, we did move above it after holding below it on Friday, but as you can see, we're back below the level and also back below the swing area, 50% retracement, which may be enough to tilt the bias more to the downside for the Aussie versus US dollar today. Pay attention to that level up to 0.69196. Stay below it is more bearish. If we can stay below the 50% retracement of 0.69085, that would be even more bearish. My name is Greg Michalowski. Good fortune with your trading today. Thanks for listening. Bye-bye now.